Welcome to another trade recap where I'm day trading S&P futures on an Apex evaluation account. Today's the last day of Apex's 80% off sale. You have until midnight Eastern time to sign up for your own Apex account with my link in the description and use my coupon code for 80% off your first month and 80% off all recurring months. Starting tomorrow, the coupon code discount will be back to 50% off. Since I've been making occasional adjustments to my risk rules, it might be hard for y'all to keep track of all the updates. So going forward, I'm going to display my current risk rules here at the beginning of each video. Note that my current risk rules are especially strict, as I'm trying to train myself to be better at accepting losses and not let them have such a negative effect on me. Every single time I've blown an account, it was from reckless trading after getting tilted from taking losses, so I'm currently laser focused on addressing this bad habit. This morning, I see price take out pre-market liquidity before tanking down to shift market structure, and set a conservative entry at a 3-minute fair value gap. I found that these conservative fair value gap entries that are within the displacement range don't always get filled, but when they do, they are much better reward to risk. Since my new risk rules are heavily limiting the amount of trades I can take each day, I'll be going for more of these conservative entries. Anyway, this trade works out beautifully. After I get filled and price puts in a lower pivot high, I adjust my stop loss to this new pivot high and patiently wait for price to hit my liquidity target. I see another decent setup present itself, but admittedly this one could have had more confluence. There was a market structure shift, but it wasn't exactly energetic. Also, there was bearish AD divergence, which was against my long trade thesis. Nevertheless, I still do decide to take the trade because the reward to risk of the setup was so favorable, and I was fully prepared to accept the loss if I did get stopped out. After a little bit of consolidating, the bearish AD divergence does play out, and I get stopped out for a small loss. So we only ended up taking 2 trades today, but I did have a number of other conservative limit sell orders that just never got filled because they weren't deep enough retracements. Missing out on price moves that you're expecting can definitely be frustrating, but not letting FOMO get to me is just another psychology area that needs to be trained. It's objectively better to miss out on winning trades than take losing ones, and for me to maximize consistency, I can't make any exceptions to my entry requirements, which currently do call for a deep retracement into the displacement range. Anyway, I'm overall pleased that I stuck to my rules again and have booked another profitable day, bringing the evaluation account total to $50,613. Despite winning and losing roughly the same amount, I'm still net positive due to having favorable reward to risk ratios for each of my trades, and this is something that I'll continue to focus on. I know it's still very early on in testing out these new risk rules, but I'm already feeling better about taking losses. Closing out of my charts after hitting my loss limit has also been working great, as I'm not tempted to put on more trades and break my rules. If I can maintain these risk rules for the life of this evaluation account, I'm pretty confident that I'd be able to keep it up on a funded account, but of course only time will tell. As always, thanks for watching. Please leave a thumbs up if you enjoyed, and subscribe so you're notified of the next time I post a trade recap. In the meantime, I'll continue posting daily profit and loss updates in my channel's community tab.